Super, great. Thanks everyone for being here. You can hear me now because apparently at the beginning yesterday, I wasn't very loud. Okay, so Bridge Plus, FinTech Odyssey, thank you so much for hosting us today. Again, I'm gonna mention, as I did yesterday, we're really excited to be part of this initiative, and also especially since we're tenants upstairs, just in the process of moving. Last day of Singapore FinTech Festival. So I hope you've all enjoyed it and you've caught it. A lot of interesting panels, I would say, especially on Web 3.0. So I encourage you to go back and watch some of those. A lot of definitions thrown around, a lot of new ideas. So go check it out. So I've got two really cool guests today that have two different points of view, two points of views from corporate venture building. So why don't we start, and I'm just gonna let yourself introduce yourselves. So why don't we start with you, Harald?
Well, thanks for having me. Very excited to be part of the Singapore FinTech Festival. We participated at SC Ventures in a number of different panels as well, promoting our ventures, obviously, around DeFi, embedded finance, and a number of different technologies as well. Yeah, very excited. I think we're obviously quite new in terms of venture capital. We're only 3 years old. For those of you who don't know SC Ventures, we're part of Standard Chartered Bank, and we set up our venture arms 3 years ago. So I can go into more details, but maybe let Andy introduce himself as well.
Yeah, thanks. So hi, everyone. Amazing actually just to be in a room with people on the stage. I think it's been at least 18 months since I've done this. So very pleased to be here indeed. Yes, I'm Andy Lees. I'm partner and product director at BCG Digital Ventures. BCG actually also just coming into a tenant in this building as well. So super exciting. Although the digital ventures arm, we're a little bit separate. What we do is a bit different. We're not like the consulting side of things. And to make sure that that's obvious, we've got a different building out by Rochester Park. We've got a beautiful campus of black and white buildings there in amongst the greenery. So maybe some of you have come and visit us over there one day.
Fantastic. And I actually forgot, I didn't introduce myself. So Pauline Wray, also from Boston Consulting Group, and another part of Boston Consulting Group. I run a corporate venture actually, which is the FinTech Control Tower, which is a FinTech insights tool and dedicated FinTech business units. Excellent. So I thought we start with a bit of the corporate venture building side of things. Right. So, but a few questions sort of on the personal side. You can answer all of them or just give one example. But what was the first thing you built as a child or as an entrepreneur or as a corporate venture builder?
Me to go? Okay.
Go for it.
So maybe I won't take the child thing. That was probably something Lego. So that's probably pretty straightforward. But I can talk about the first business I built actually back in 1998. I was like number 4 employee. I don't think we really called it startups then. It was kind of a corporate venture in that we were building out a market research data collection business for a management consultancy there. I kind of remember I can picture the room, like the 4 of us, the one desk, no computer, one phone that was like attached to the wall, you know, like Bakelite phone with a dial thing. And day one, we're like, okay, we're going to build this business then. And I guess that's where I kind of began to get addicted to that whole process, and you know, had an 18-month roller coaster ride building that business. Still running today, actually, nearly a quarter of a century later. So. I guess I could chalk that one up as a success.
Probably a similar story. I don't remember building Legos, but I was building puzzles. But as a first venture, so I started my career in France and moved to the US back in 2003, and had an opportunity to launch my own startup in 2009, 2010. And we partnered with my tech guy to build an online medical community where we would connect health influencers to pharmaceutical companies. And yeah, I mean, as Andy mentioned, it was both a lot of upsides and downsides back then, going up and down. So really understand where founders come from. It's quite a roller coaster experience. Yeah, I mean, within a few years, we were acquired by one of the big health companies in the US.
Excellent, great examples. And Andy, your example is reminded me of my example as well. So actually, my first that I dabbled into starting a company was a record label. But that's when I realized that your co-founder is very important. He wanted to party, I wanted to DJ. So we broke up fairly quickly. And then the second one was the one that we sold to, where we exit to BCG. So same market data, benchmarking sort of stuff. Excellent. Now, there's a lot of corporate venture building now has, I mean, if you compare it to 10 years ago or even before, has a different flavor, right? Everybody wants to get into it. I was mentioning to Andy, when you work on projects at BCG as well, and you get a bit of a taste on the ways of working, you know, how fast it moves, you know, the multidisciplinary teams that you have in it. So for our audience, could you tell us on how do you get into this space?
Well, I can talk a little bit about SC Ventures. So for those of you who don't know SC Ventures, we started off with an accelerator lab. So similar to innovation labs you can have in big corporations, set to bring innovation to Standard Chartered Bank. And we realized very quickly that having a lab by itself was not going to be sufficient in order to bring some changes. So we decided to include two different activities on top of the lab. The first activity is a typical VC. So we'll come, our first mandate, our first fund looks at Series B. So we will look at companies that already have a team, already have a product, already have a set of clients, and we'll help them scale from, let's say, 510 to 50 to 100, also connect them to the bank. And then the third activity that we have is venture building. So venture building, to your point, I think Pauline is becoming more popular. We realized that in order to bring innovation, we cannot just do it from within. So we will look at ideas that we think can resonate on the market, mostly from within. So we'll look at ideas that come from what we call intrapreneurs and provide the right level of resource, the right level of market research, prototyping, technology, financial support as well, obviously, and take them from incubation all the way to commercialization. Most of these ideas, as of today, come from within, but we also partner with external ideas and help them complement our pool of ideas.
Okay, so maybe it'd be helpful if I try and, for me, it's helpful to contrast like corporate venturing against maybe the alternatives of maybe having like an innovation team, maybe having an accelerator, maybe doing some acquisitions. So I think like, I wouldn't knock any of those approaches. I think they're all, you know, valid approaches. They all have their place, and probably for a large corporate, the most effective strategy is to have a portfolio across those type of approaches. Where I think corporate venturing fits in is that, you know, let's take innovation, internal innovation. I think innovation teams often struggle to really kind of break out from under the corporate wings. Very often, and I've been in an innovation team myself for many years, and I've set them up. It's too close to the corporate. It's often too close to the corporate constraints, unless you really go to the next step of, you know, breaking them out, separate teams, separate hiring, separate reporting lines, report them straight into the board. Generally, they're going to get lost like somewhere within the mass of the organization and the speed that the organization moves at. or they're going to create something like too small to make a big impact. Then you can start thinking about, okay, do I do an accelerator? Do I start investing? Like, that's also a great approach to get a kind of head start on these breakout businesses. I think the issues that we typically see there is actually that they have founders. Like, all these businesses have founders, and that has pros and cons to it, right? It's great to have a founder that's able to drive the business and have a focused vision. The problem is that that founder's vision might not be like 100% aligned with the corporate vision. And when it's not aligned, you can end up with a wide variety of problems. So for me, the corporate venturing approach is really an answer to that question of, okay, so as a corporate, like, how do I solve those problems? How do I get the speed, the nimbleness, the excitement around a startup that's able to do something breakout, but I do it on my terms, without a founder, that's fully aligned to our corporate strategy, and then give it the space to go and run. So I think that's something that I've seen like corporates begin to realize over the last 6 to 10 years. I think if we go back, maybe 10 years, maybe the kind of innovation incubator route was more popular. I think certainly the last 5 years, more and more corporates have been looking to take the corporate venturing route.
Fantastic, thanks for that. And in terms of the skill sets, when you hire in corporate venture building teams, what are the types of skill sets that you're looking for? Is there any type of experience that you need to go through? Do you need to have a failed startup? Do you need to have a successful startup to be part of the team?
So we will typically start with a venture, what we call a venture lead. So that venture lead typically comes from the business. In our case, it's someone who's been with a bank, understands their side of the business quite well, and has identified specific pain points that he or she wants to solve for. But obviously, it cannot be a one-man's or one-woman's team for very long. So very quickly, you need to scale. I would say naturally, the one skill set we need very quickly are going to be a tech person. So a tech lead, a CTO, this kind of skill set. As we see the venture progressing through the different stages of incubation, we will partner we might do what we call an acqui-hire. So we'll look at, let's say a startup or a FinTech that we think is interesting. And we've identified that it goes faster acquiring the technology and the team in order to scale up and merge it with our team. So that would be one option. Or the second option is going outside, partner with a venture builder. And that venture builder can little by little bring the skill sets, bring the people, bring the competencies that as a corporate we wouldn't have internally.
Yeah, so from our perspective, so we look for diversity, right? We look for me, I think about it kind of like a superheroes team, right? You don't have any superheroes team where like everybody's got the same superpower. So we're looking for that. We're looking for these people that really have superpowers in their different disciplines, whether that's design, whether that's engineering, whether that's business structuring, or whether it's product management. And then within that, we've got this criteria that's super hard to hire for, and that's we need you to be able to communicate in a way that corporates can understand. We need you to be able to walk into a boardroom, but we also want you to be an entrepreneur and someone that takes risks, and someone that's founded a business and that's been on that journey and understands what it's really like. And maybe to go back to your original question, does that business need to have succeeded? Well, I think if it has succeeded, wonderful. We love that. If it's failed, depending on why it's failed, that can also be okay. But because startups do fail, right? It's not a guaranteed sport. And I think also understanding that is part of the learning.
Fantastic. And we'll talk about the culture as well in a little bit. So you talked about 10 years ago, when you try to talk about entrepreneurship or intrapreneurship 10 years ago, I think people probably looked at you, especially in big financial institutions, right? And corporates as well, a little bit puzzled, right? So what would you—
They still are.
And they still are. I can confirm that, sadly. So what sort of urge, if any, though, is there today to develop corporate venture building?
I think in our case, it's quite clear. You know, you said 5 to 10 years. I think it's about right. Most of the innovation that has come in the financial industry has come from our non-traditional competitors, people or companies we did not expect to disrupt us. It could be people who were, or companies that were in the ecosystem, and they decided to make the right choices at some point. You know, companies like MasterCard or Visa did make a shift at some point, or very lean, small fintechs that have done so well because they are more agile, they're more technology driven. They have, you know, user experience design in their DNA. And some of them today have actually a valuation that is higher than an institution like us, which is over 100 years old and 85,000 employees around the world. But if I look at, you know, Stripe or Revolut, their valuation is higher than Standard Chartered Bank today. So I think, you know, the FinTech, I would say as well, the big tech and companies like Apple, Meta, Metaverse, now are also on that space. The only thing I would say is one aspect they don't consider is they don't know what they don't know. And typically when it comes to regulations, when it comes to understanding, you know, compliance, maybe financial crimes, these kind of things, we have a real unfair competitive advantage, and that's where we're still relevant. So the need for change, the need for innovation is what brings corporate venture building.
Okay, great. And before you go, Andy, though, just wanted to put into context on the Stripe example. So this is what we call in FinTech vertical champions. So they started with one product and now they're rebundling banking. 2017, they were valued at $9 billion. Today, $95 billion, just to show you how fast, how much is accelerating and how much, you know, obviously investment they're receiving, but also market share that they're getting.
Yeah, I think that's a great point. I mean, I think part of it is just, you know, looking on at these startups, at the valuations, and thinking, wow, like we need to be a part of that. We're 100% getting left behind here. But I think there's maybe something in addition to that, which is that there's a broader, people are more educated about disruptive innovation than maybe they were 20 years ago. You know, the corporate board at that time would probably sit there and think, you know what, we've got this business for life. Maybe we tweak it a little bit. Maybe we go into some new markets, but this ship is pretty stable and we know where it's going. I think that awareness of these innovation cycles now is, you know, very strongly embedded in the corporate psyche, and that board is sitting there thinking, do you know what? How many years are we going to be able to keep going on like this? Like, when's our burning platform moment? And what can we do today to position us better for that moment when it comes? So I think there's that creeping fear is more there than it's ever been.
Yeah. So how do you get everybody behind you? So how do you get that, you know, innovation culture pervasive across the entire organization and not just, you know, one or two people who have that innovation on their business cards?
So it goes back a little bit to what Andy was saying is we go beyond just innovation, because I think if you only have or set up an innovation lab, you're going to be constrained by the business. and probably have like a limited opportunity to, to change things. So having the ability to create ventures that bring optionality for the corporations, probably outside of the corporation, is exciting. I would say the business, it's exciting management. I can actually share, like I said, we're only 3 years old. We had recently our Investors Day, maybe 2 or 3 weeks ago. And 50% of the content was about SC Ventures. So I think corporate venture is getting a lot of momentum, and people see the potential that they can realize with creating ventures.
So, okay, I'll give you the short answer and the longer answer as well. The short answer is start with the CEO, get the buy-in of the CEO, and things fall better into place from there. The maybe more nuanced answer is that actually the interesting thing, although our proposition is to create this venture that's entirely separate from the corporate, a lot of the value that the corporates end up seeing from the work that we do is the transformation that we do within the organization. Even if we don't touch the organization, or we touch it slightly, there's a cultural transformation that's happening. When we bring in team members and we expose them to new ways of working, when they go back to their business units, they bring those ways of working back to their business units, and they bring the excitement and the enthusiasm for it. And actually, our mandate isn't to create this organizational change program, but it often begins becoming the spearhead for that. And that's like best practice change management methodology anyway, right? You want to change a big organization, you don't try and change everything in one go. You create these flagship projects. And I think these ventures that we set up can become the Uber example of that.
Super. No, that's really helpful, and I definitely think it does rub off, and people get excited, right? I mean, it's why so many people want to work for corporate ventures as well. Hurdles and challenges. So obviously, you have I think the biggest challenge is culture, right? This, keeping with the status quo, but also agility, flexibility, risk aversion, failure, culture of failure, right? So people like you have to embrace this perspective. How do you sell that internally? Or you say we're gonna make it every time?
So I think it's a bit about how you set it up. So corporate venturing, when it's done right, takes the best of what a startup can bring and marries it with the assets that a corporate can bring. And that might be access to customers, access to suppliers. It might be that you can have high-level relationships more easily. It might be that you've got access to data or some other assets. If you set the venture up right, you're identifying like an asset that you can leverage, and then marrying it to a customer friction, and building this separate venture to capitalize on both of those things. When you set it up wrong, you can end up with the worst of a startup and the worst of a corporate venture, the worst of a corporation, i.e., I've got no access to privileged assets, and I'm getting dragged down in velocity because I've got to get sign off for 300 different things before I can move anywhere. So I think it's about structurally setting it up appropriately, and it's more importantly about setting up the business proposition so that you can really capitalize on that unique corporate asset.
Yeah, I agree. I think setting up the right structure upfront is important. What we've decided to do actually is setting up, so we're not fully independent. We might spin off at some point, but we are from a business perspective, we're completely independent. So when it comes to our fund activity, we've set up our own fund. So we don't have to actually use the balance sheet of the bank in order to invest in companies. We have set up our own fund. We also, when it comes to building ventures, you're right, in a big corporation, especially in the financial industry, there's a lot of risk aversion. It's part of being regulated, you know, and it's part of compliance issues. But we don't have to ask permission to launch a venture. As a matter of fact, the business comes to us and says, you know what, we've thought of this. Would it be a potential venture idea? And then we decide yes or no. And I think you need to be able to build fast, invest fast, but also kill fast. We are in situations where if the venture doesn't make sense or if the investment is a bad investment, be able to write it off and move on is important. So I would say to date, just to give you an idea of scale, and I'm sure BCG Digital Ventures is more impressive, but in 3 years, we've launched 30 ventures. And we've invested in 20 portfolio companies. Just to give you a scale, about 10, building 10 ventures per year and making more or less 6 investments a year.
Right, and I'd love to get some examples, obviously, especially on the fintech side later on. But you both touched on something really interesting that I'd like to go a little bit deeper on. Is what are the benefits corporates can exploit as they do some corporate venture building, right? You were talking about, you know, risk, compliance, financial crime, experience in that. The same, you know, with your experience within helping other corporates build.
Sure. So, I mean, I mentioned just a minute ago, some of the typical ones are often access to customers, suppliers, data, etc. Maybe I'll give an example of a venture that we built in the Middle East, where the linkage wasn't necessarily so obvious. We built an insurance, an insurtech startup for an oil company, right? And when we were working with them, what we found was they actually had this subsidiary business, which was the place where people had to register their car once a year. So we started thinking about, you know, maybe like how could that be useful? And clearly that's an obvious place where you might want to be able to sell auto insurance, right? But then we started like thinking a little bit further, and some of the insights that we got were that there's a lot of multiple car ownerships in this market, and people have cars like sitting in their garages, not going anywhere. So we started also thinking about this pay per kilometer insurance proposition. And we looked at various technology solutions for it, but actually there was some legislation in place that meant like tracking and mileage trackers and stuff was banned. But what we could do was use this subsidiary business, which had to have every car every year and have the mileage of every car every year registered, to then create a pay per mile insurance proposition that was completely unique and disruptive in the market. So it's actually it's a pretty cool business. It's doing really well. But I think for me, that's like a really fun example of how you can, you know, look at the corporate portfolio of assets, like really all of them, and then look at them very creatively and marry them up with what you see in the market as a list of customer frictions. I mean, we did a huge ideation process to get to this, right? I mean, we're coming up with hundreds of ideas. But when you start to find the ones that say, do you know what, we're matching a customer friction that is, you know, that is real and that's acute and that's large enough with a corporate asset that gives a unique advantage, an unfair advantage to the startup in the market, then you start thinking that you're onto something.
That's a great example.
I think for us, it's a few different factors. The first factors is bringing optionality for the bank. So things that the bank cannot be doing inside, being able to do them outside. You know, potentially getting new customers, serving segments that we can't serve or markets we can't serve right now would be one. Doing things faster, scaling up faster is also another thing. And also partnering with clients to come up with solutions that resonate on the market. So yeah, it's mostly keeping the end user in mind when we develop things.
Great. So FinTech now, before we move to a little bit more of a Southeast Asia, Singapore flavor of the conversation. So FinTech, just to throw you some numbers, you have, I think, $108 billion to date in 2021 being invested, equity funding into FinTechs. That's basically the total amount of 2019 and 2020 together, and the same amount as 2010 to 2017, right? So there's a lot of money. And when you think about the FinTechs that were created between 2010 and 2017 that are massive today and have really, created new business models, being as digital attackers, what are some of the interesting FinTechs that you've been sort of building globally or here?
Yeah, I could probably go on for an hour on
Go
this.
for it.
No, but I think what we're interested, we're looking at 6 different themes. Some are very close to banking. So we set up a digital bank in Hong Kong called Mox, which is doing great. We're going to set up a digital bank in Singapore in partnership with NTUC, which is going to be coming in a few months. We're looking at digital assets, so anything around cryptocurrencies. We built a cryptocurrency exchange where you can exchange your cryptos against specific fiats. That's in the UK, and a custody solution for our institutional investors. In this part of the world, we're bidding a lot on blockchain and how blockchain can enable better transparency, authentication of assets in general, and democratizing assets to more retail investors. We have an e-commerce platform in India. I mean, we have a lot of topics and industries that we are massively for our scale investing in.
Excellent. No, interesting. Andy.
Yeah. So, I mean, obviously, globally, like a lot of different fintech ventures. Maybe I'll call out a couple in the region that might be familiar. OVO in Indonesia, the payments platform there. So that was one of ours that we launched. Boost in Malaysia. Maybe Boost, the like digital wallet, for those of you who are not familiar. Maybe interesting kind of story about that. So we were working obviously with the telco there, and what we found was there was a customer friction around top-ups. At the time, the top-ups were still kind of card-based top-ups. You needed to go to the news agent, kind of manual transaction, bit of a hassle. There was a very obvious opportunity to digitize those top-ups, but it could have been done in a very kind of bland, straightforward way. Here's a web page, you go there, you top up. What we noticed was that there was an opportunity to do something a little bit more engaging. And I don't know if any of you have kind of seen this in Malaysia, but actually the way that you top up is through this Boost app. And we put these gamification pieces into it where every time you top up, you can kind of shake the app and get a random reward and a random prize. So it moved this proposition that could have been like a pretty bland top-up thing into an e-wallet that became a little bit of a national craze, and they could put like a really cool advertising campaign around it. I would encourage you to maybe look it up on YouTube or something. Get some celebrities in, kind of doing this dance of this, what became this iconic shake to get your rewards after you topped up. So I think for me, that's some of the kind of more fun like opportunities to enter this space in a way that stands out, right? Because there's a huge amount of players. I think there's like 150 like wallet or digibank type offerings in the region. So I think unless you've got a very strong access to customer base, It's not just about thinking about kind of what's like, do people want a digital wallet? It's like, how do I add something to make that the digital wallet that people use? And then maybe if I go on a little bit further, I think then there's an opportunity below that to think about, okay, if everybody's launching digital wallets or payment platforms, like what's the infrastructure layer below that powers that? Because actually maybe I don't need to be the one that acquires the customers. Maybe I can take the more B2B play and be the one that that powers the infrastructure. I tell you what, let me tell a little digression story. I love the concept of about 5 to 10 years ago in the UK, craft gin started becoming super popular and all these gin brands were getting launched. And there's a couple of entrepreneurs who wanted to launch a gin brand, and they went to investors. They said, look, we've got this great idea for this gin brand. It's got certain flavors. It's going to be lovely. He said, look, I tell you what, loads of people have pitched me gin. I don't need any more gin, but have you thought about tonic, right? Because people like to have gins with tonic. And I mean, luckily they got the most brilliant piece of advice ever from him. So instead of launching their gin brand, they launched Fever Tree Tonic, which became a massive tonic brand, overtook the incumbent Schweppes, which was the only other brand in the market at the time. So rather than competing against 100 other different gin brands, they only competed against a boring old incumbent Schweppes, and they were served with every different gin. So when I look at these kind of, certain business models exploding, I like to think about like, what's the tonic for that gin?
I know what I'm having tonight.
It's about that time, isn't it?
That's excellent. So actually, when you were telling that story as well, for those who are really interesting about, how you build companies and stories as well, somebody I can recommend, and also his book, but his podcasts are amazing, beautifully done, is Guy Ross, How I Built This. Lots of up and downs. Some of the journeys are really long of these founders. So if you're into that, highly recommend it. All right, now to the region, Southeast Asia. So Singapore, both of, we at DV, we chose to make Singapore our hub. We have one in Sydney, in the region, in Japan, in China, and you guys as well set up your hub here. So what makes the region so exciting, and also Singapore so exciting?
So I guess if we look from a numbers perspective in the region, from a like very, very basic kind of going through the numbers, we've got around 400 million people with access to the internet, depending on how you count it. And around 70% of those are still classified as being unbanked or underbanked. So like factually, in terms of an opportunity, it's huge. We've got 35 unicorn startups here. We've got huge investment inflows, as you mentioned yourself. So I think, the buzz combined with the opportunity is massive. And so I just came here in January from after 5 years in building corporate ventures in London. So I'm excited to be here and to tap into that opportunity.
Any difference that you're seeing already in terms of the skill set, London, let's say, and the region, or also ideas?
I think what strikes me when I look at when I kind of look at the digital ecosystem, just very like top layer, superficially, I think the kind of super app mentality is a very striking difference here, and there are opportunities there, right? Like, if you have an app, it's okay to put any other proposition on that screen and nobody thinks it's weird, right? So I guess in the UK, it's still very much a mindset of an app does a thing. And if I try and put something else into that app, there's a bit of an allergic reaction to it. Very, very different here. And that has implications, not just for the UX, for the UI, but also for the adjacent businesses that you can build, and the way that your strategic position might be different as an incumbent who has that opportunity.
Interesting. Hadn't thought about that. Harald, I mean, you guys, especially with your footprint and everything.
Yeah, I think, as you said, it's our footprint. We've been in Singapore for a very, very long time. It's actually, although it's not where we have our headquarters, it's where most of our activities are. It's in this part of the world. Like Andy said, I think, it's a lot of opportunities from a numbers perspective, but it's also where a lot of trade finance is happening, and we're one of the biggest trade finance banks in the world, right? So it makes sense for us to be in Singapore. We see opportunities in emerging markets in the region, but not only. We also look at Africa and the Middle East, but we coordinate everything from Singapore. So this is where, if you're interested in SC Ventures, either joining us or learning more, obviously, come and see us in Singapore.
Fantastic. No, thanks a lot for that. So I would say, I guess, any advice, any thoughts on that you could give for anybody that's looking to join this space? Anything that they should start thinking about, or getting themselves ready, or what do they need to have?
So generally, as I mentioned a bit earlier, we look for people who've got a bit of corporate experience, but also very important to have that entrepreneurial drive, have that kind of somewhere in your background. Actually, sometimes it can be a side, depending on the level. Sometimes it can be a side project if you've shown that inclination to really go build something and build a genuine business. Other than that, I would say, reach out to me on LinkedIn, and happy to get in contact.
Harald.
I would say if you're an entrepreneur, or if you're thinking about it, take a leap of faith. It's worth it. So that's my number one advice, and hang in there. Resilience and grit is one of the top qualities of entrepreneurs and intrapreneurs. So that's the number one advice I would give. Jump into the entrepreneurship experience and hang in there, even in the difficult times. It's definitely worth it.
Yeah, I've had many highs and many lows, and the advice somebody gave me is that when you're in the middle of it, it always looks like failure. So say, for example, you're in the surgery table, it looks like there's been murder, but somebody's going to be saved at the end of that, and it's going to be all good. So that was good advice, because it's true, when you're in the middle of it, everything seems to be messy. Do we have time for questions? Yeah. Does anybody have questions in the audience? Yes, first the audience, and if anybody's online.
We have a question that was sent virtually, so I'll just read it out. Can corporate venture be successful without the existence of a founder entrepreneur? And do you have any examples of such successes?
Yeah, absolutely. I mean, we always kind of grow the founder with the venture, I guess. Very often it's one of the team that has gone through the corporate venturing process that then ends up stepping through to be the CEO. Sometimes we recruit from outside, but generally somewhere in that senior leadership is somebody that's gone through the journey, maybe even having come from the corporate partner and never thought of themselves actually as an entrepreneur.
I would say that you need someone to come up with an idea initially. It doesn't mean that the person who comes up with the idea will carry on with it and will become the CEO of that company ultimately. So we often refer to them as initial founders, venture founders, but we do see some opportunities to bring external CEOs or external venture leads down the road.
Okay, do we have any other questions from the floor? Everyone's very shy.
Everybody wants their gin and tonic.
Yes.
It's officially known as the beer blocking slot, isn't it?
Okay, if we don't have any further questions, we would like to thank our dear panel speakers today for coming down and giving such great insights into the venture building. We've now come to the end of the Bridge Plus FinTech Odyssey, as well as the Singapore FinTech Festival. It has been a pleasure and honor for us to host all of you. Now, the conversation doesn't end here. We hope that you continue to learn and share with the community. And this brings our event to a close. We would like to thank all of you who have joined us all across the world. And for those of us who are here physically, please feel free to hang around the space and grab the speakers if you manage to do so and if their time permits. And thank you very much. And I won't hold you guys back from your gin and tonic. Thank you. Thank you, everyone.